Right. Before we kickstart trade for our markets, a look at the Asian markets. They're not looking too good. In fact, they're lower in early morning trade following the overnight rout that we saw on Wall Street, a near 500-point decline on the Dow Jones, as well as the fear index spiking too. Nikkei was at the open is down about 1%. Perhaps some sort of flight to safety going in as the dollar yen strengthens past the 112 handle, closer to the 111 handle. Not particularly good news for the Japanese exporters as well. We saw some weakness in the dollar index coming by overnight. Keep an eye out on the other indices. The Korean markets also lower as we speak. Along with that, we have the Straits and the Taiwanese indices in the red. What is more important though is the SGX Nifty. Our markets have shown some sort of outperformance over the last 1 month, particularly in the last 1 week. And the SGX Nifty too, while indicates a muted start, the start is much better than what the other markets are currently trading at. 10,986. Perhaps the bulls will take that with both hands.
Okay, the Indian markets outperforming, and the fact that the crude has declined and sitting below the $55 per barrel mark is another tailwind for the Indian markets. But that was not the case in the US markets, because there the stocks closed sharply lower for the second day, with investors rattled after the Federal Reserve's interest rate policy and fresh concerns of a partial government shutdown. The Dow dropped almost 470 points and is now down 15% from its early October peak. The S&P 500 fell around 1.5%, and similar was the case with Nasdaq, which briefly went into the bear market territory. CNBC's Josh Lipton gets us a wrap of all the action on Wall Street.
U.S. stocks sinking after the president said he won't sign a spending bill that doesn't include funding for a border wall, increasing the threat of a government shutdown. The Dow sinking 470 points, though it had been down nearly 700 at the lows. The S&P off 39 and the Nasdaq down 108. U.S. weekly jobless claims rose less than expected this week. Initial claims climbing to a seasonally adjusted 214,000 for the week ended December 15th, the Labor Department said on Thursday. Meanwhile, a new analyst report says Apple could cut production of its iPhones again because of slow sales. This comes as a German court ruled Apple must stop selling some phones in that country because of a patent fight with Qualcomm. Shares of Apple down nearly 2% on the day. And oil getting shellacked again today, down nearly 5% to a 17-month low. Crude is now under $46 a barrel, fueled by concerns that there's too much supply on the market. Oil prices are now down 24% on the year. Need further evidence? Just look at what it costs to fill up your car. Gasoline prices are at their lowest level in well over a year. That's the action from the U.S. market. Now back to you in Mumbai.
All right, that's as far as what took place in the US markets last night, but we're just getting news just about an hour ago that the House has passed the spending bill with border wall money, setting up a shutdown stalemate with the Senate. They've passed a temporary bill with more than $5 billion for President Donald Trump's border wall. Let's see whether this gets approval in the Senate or not, but this is something that will increase the volatility going ahead. Everyone is on tenterhooks. In fact, on that note, there is some opinion coming in from market experts Jeremy Siegel, Robert Schiller and Jurrien Timmer on what's next after the Fed hike and just ahead of the earnings season.
I was pretty shocked when I saw the statement at 2 o'clock. I said, oh boy. I shook my head and said, this isn't good. They barely acknowledged any slowdown. I mean, the wording was just so cautiously more dovish. Don't forget, I mean, we talk about the fact that they lowered by, from 3 to 2 the number of projected funds increases next year. But the market, in the futures market, they lowered it from 3 to 1, barely 1. So, I mean, they're behind the curve. I think long-term investors are definitely going to be rewarded. However, remember, if there is a recession, earnings are going to drop 20%. You're no longer at 15, you're at 18. You're worried about that. There's political concerns going forward, clearly, in the second half of this Trump administration. There's worries about what's going to happen in 2020. Is there a potential of corporate tax cuts being drawn back? Don't forget, when psychology shifts, and we've had that, everyone looks at, oh my God, what could happen? The gloomy side.
It's about the time that they come up to 0 or something like that, when the economy is showing signs of strength. So I'm impressed with what he's doing, and it seems to me shouldn't stir the markets a whole lot. I think the small rate increase they did is given the fact that we still have virtually 0 real interest rates, even with a 3.7% unemployment rate. It's a very reasonable sounding step. It's not, shouldn't be harming the market so dramatically.
Markets is grappling with a slowdown in earnings growth. I think the Fed, we kind of know where the Fed's at. You know, the Fed's basically saying if the economy is going to grow 2.3% next year, which is their target, and inflation's at 2%, then we're inclined to hike 2 more times. But there's clearly downside risks to that. We don't really see inflation going north of 2 anytime soon. So I think the Fed did what it was supposed to do. You know, the Fed cannot overreact to every 10% decline. I mean, we're asking Steve, the odds of a 10% decline historically are 1 in 3. So they happen all the time. It's part of the noise factor in the markets. But so at this point, I'm thinking we're going to get 5% earnings growth next year. The Fed is nearly done, maybe not quite done, but nearly done.
And in political news coming in from the United States, the Defense Secretary James Mattis has stepped down from his position. Mattis's resignation letter, which a Pentagon spokeswoman said that was hand-delivered to the president on Thursday afternoon, comes on the heels of Trump's controversial plan to withdraw U.S. troops from Syria. Now, Mattis cited differences with Trump over his Middle East policy as the reason for his resignation. He will be retiring at the end of February next year.
All right, and across the Atlantic, in Europe, markets closed with deep cuts. The UK FTSE slipped about 0.8%, while the French CAC as well as the German index too extended their losses by about 1.8% and 1.5% respectively. All the peripheral markets, they too closed sharply lower. The Bank of England held their interest rates steady, with the UK's economic outlook being highly uncertain, less than 100 days before the country leaves the European Union. Similar with the cuts that we saw across the peripheral indices too.
Okay, so deep cuts across the European equity markets, but in the currency space, there are cuts in dollar as well, because the dollar has fallen to 1 month low after the Federal Reserve signaled fewer interest rate hikes over the next 2 years and expressed caution about the US economic outlook, while the yen surges versus the dollar.